I continue to stand by this proposal. It will not be a panacea, but I believe it will be a step in the right direction and have some detectable benefits. A concrete version of this idea emerged in discussions with Leo Tillman. In this blueprint, the state would make an initial contribution to a government-sponsored enterprise, and this enterprise would create a system of new banks or other bodies under its umbrella. Leo and I came to realize that this financial system, might call it the innovation finance system, could be loosely modeled after the mission and the structure of the farm credit system in the United States. Every one of the members of our system would be engaged in relationship investing or lending to entrepreneurial ventures in various industries and regions across the country. These entities would be properly chartered and capitalized to reflect risk-return characteristics of investing and lending to the targeted category of entrepreneurs. Through a dedicated funding arm, like the Federal Farm Credit Banks Funding Corporation, our system would raise funds in the global capital market at relatively attractive rates, owing to its status as a government-sponsored enterprise and owing to economies of scale. These funds would be passed on to entrepreneurs at rates commensurate with the risks of their projects, as judged by experienced investment and loan officers. Finally, the joint and several liability of our system's members, a separate insurance fund that protects debt holders, and proper oversight and transparency can all foster well-judged business decisions, rigorous risk management, and properly aligned incentives. Another version of the basic idea would make available equity financing as well as lending, and the new institution's finance could be concentrated on investments rather than loans. The banks in that case might better be called funds for innovation rather than banks for innovation. I've come to see that it is better that the proposed fund invest in new ventures rather than to finance them only by lending. A lender is apt to find that there is no interest rate high enough to cover the losses from the loans that do not work out. The higher the bank raises its interest rate, the higher the rate with which borrowers default. So there is just no way out. The startup entrepreneurs will welcome a partner. The startup entrepreneurs themselves will welcome a partner taking an equity stake, but will not welcome the same quantity of finance in the form of a loan. I was talking yesterday with Mario Draghi, the governor of the Banca d'Italia, as you know, and he was recalling that Goldman Sachs typically invested in a company. Sometimes they would invest and lend, and then often they would resell the loans to others. So it's very customary in the financial sector that loans, especially to innovative projects, are investments, that the financing is in the form of investment rather than lending. I would like now to address some of the questions raised by this proposal. One question is, what justifies committing the resources of the state to this initiative when there are so many other worthy initiatives that might be launched instead? My answer is that, as I've already said, the government owes its citizens, young and old, the dignity of work, the pride of being self-supporting, and the opportunity for realization of talents and the discovery of one's capabilities. And to have these so-called primary goods in one's own country rather than having to go abroad to get them. Another question is whether this is not a time for the government to spend more rather than to spend less. My answer is that most of the annual outlay for the new financial initiative is an investment that will bring back cash returns. Furthermore, cutting back on government expenditure is not a reliable way to increase employment. It might or might not do any good while costing something in other social dimensions. Let me say that I do believe that many initiatives of the welfare state operate to sap incentives to work and to reduce willingness to take business risks. But with regard to government expenditures as a whole, I don't believe there is strong evidence to suggest that across-the-board cutbacks increase employment. A worry among many economists is whether any investment-type expenditure by the government crowds out other kinds of investment expenditure, more or less dollar for dollar, euro for euro, so that the benefit, if any, of increased investment expenditure for innovative projects is significantly offset by the loss of the benefits from other kinds of investments. My answer is that actions to enhance the attractiveness and financing of innovative projects does not significantly take away from the value placed on the other investment projects or add to the cost of undertaking them. Think of the business investment boom of the 1990s. It may have dented residential investment in housing a little bit, but it did not crowd out such investment to such an extent as to prevent a rise of total employment. Total employment was booming, owing to a partial, focused increase in investment activity. Many financial people question whether it is a good idea to inject into the financial sector an investment fund for innovation that will do a poor job as compared to the good job that venture capitalists and other investors do. My answer is first that it is not at all clear that venture capitalists do a very good job. They demand towering interest rates, so the more uncertain projects, even if visionary, have little chance of getting through the development process. Second, the venture capital industry is only a tiny bit of the financial sector, so it is preposterous to suggest that the VC industry should be depended upon to do the whole job of supporting a nation's innovation. Third, we must not cling to the highest standards for financing innovative investments when the more important objective is to get a large volume of innovative investment projects underway by boosting the availability of their finance and perhaps reducing the cost of their capital. Finally, we should welcome a new kind of investor to the financial sector that, owing to its size, is willing to take risks that are unknown and quite possibly large for the sake of a comparably large payoff. We would welcome, if I may use a baseball analogy, we would welcome a Mickey Mantle on our baseball team in order to have his home runs, even if he strikes out a lot. Or, for my Italian friends, we would welcome a Franco Corelli to our opera company, even if there are many days when he fails to perform. To conclude, this is a time of crisis for Italy as well as many other countries. In many of these countries, the restoration of a spirit of enterprise and of economic institutions to serve them is the key to a return of high prosperity and the personal development of the people. Italy is fortunate that it has the economic culture that is required for a rinascimento of creativity and adventure in the economy. What now needs to be put in place are the institutions that will enable Italy to realize more fully its potential. Thank you very much.